JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 14th of December 2020, so yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So right now, let's jump, of course, into the charts. I hope you're all feeling nice and refreshed after the weekend. So yeah, we can resume looking at our charts from the technical perspective here. And the first one I want to pick up on the Nikkei 225 index. So the index, excuse me, the index closed today in the positive territory a little bit here, managed to get closer to that important resistance barrier that I talked about last week, and that's the 26,890 level, and that's basically the current highest point of this month. As you can see, we came close to it today, but we didn't really break it. So we're still waiting. We're still kind of taking a bit of a, I would say, cautiously bullish maybe approach. But yep, in order to get comfortable with the upside, well, we would need to see a nice, good, strong push above this area. 26,890 zone, and ideally we'd like to see a nice daily close above it as well in order to get a little bit more excited with the upside. So for now we're just kind of waiting. Even for the downside, we would like to see at least a drop below the 26,405 territory right here. Ideally a daily close could be nice, but of course then all eyes are going to be on the 21-day EMA and the this 26,000 barrier, and then we'll take it from there, guys. But for now, all eyes are on this little area right here. Of course, the reason also why we are a little bit on the let's say cautiously bullish side is the fact that in a way we could be potentially forming here a possible bullish flag here with a potential pole being this candle right here, the high of the 9th of December. But at the moment we cannot really kind of talk about that yet until we get that clear break above this 26,890 level. So keep that in mind, guys. Now jumping into Shanghai Composite, and the index also closed in the positive territory today. It moved above this, or should I say remained above this 3,344 territory. I talked about this one, what I was saying last week, that in a way if it drifts below this hurdle, there could be a chance for a test of this medium-term upside support line taken from the low of the 19th of March. And as you can see, the index didn't really travel all the way there. Instead, it kind of reversed here back to the upside. So in a way, it could still climb a little bit higher here, but what I'm going to do here is I'm going to keep an eye on this 21-day EMA, which now could be seen as a potential area of resistance, because as you can see, it started pointing lower. Previously, as you can see, it acted as a fantastic area of support. Now, given that we've broken this 21-day EMA last week and we stayed below it, well, now, like I said, it could play the role of a possible resistance area. So again, keep that in mind. In a way, I'm still kind of keeping this idea in my head of a potential recovery here from this upside line. But of course, let's see how all this is going to play out. For now, let's be very careful careful. If you want to look at some lower levels, well, I would prefer to actually wait for a drop below the 3,292 level. And the reason is that this level here previously acted as a fantastic area of support here, as you can see, like for example here on the 6th of November and also on the 13th of November, this area did provide decent support. On a break of this level, we would already be below this upside line and below the 100-day EMA here shown as the green line. So that's why there could be more bears joining in here if the index drifts below the 3,292 territory. Now the German DAX. This index, of course, drifted nicely to the downside last week. Most importantly, it remained and closed the week below this upside line, below this 21-day EMA, and below this 13,163 territory. I talked about that guys last week, so now let's see where this is gonna go further. Now if we look at the cash index and where the price is currently sitting at, we'll see that the price is currently actually just hanging just around this level here. So it's currently, it tried to move earlier in the morning, the cash index I'm talking about, of course. The cash index did try to move a little bit higher above it, but currently it is sitting near this area. So continue monitoring this, continue observing this little hurdle, because if it struggles to get back above this, let's say 13,213 zone, then well, maybe another round of selling could be possible. At the moment I'm considering that idea, but as well, something for you guys to keep in mind is that yes, I'll aim for some lower areas if this this territory right here continues to provide resistance, but I'll be very careful near that psychological 13,000 territory, because as you can see last week, the index drifted and tested this area, but kind of found good support around here and then reversed back to the upside. So be very careful with that, guys. But if this gets broken, if we see a nice good sharp move below that psychological 13,000 territory, now that's where it could become a little bit more interesting, and we could then start aiming for that 12,718 territory. Now jumping into DXY, and the dollar index is struggling still with this downside line taken from the high of the 4th of November, and in a way, as long as it stays below that downside line, we will continue targeting the downside, guys. However, as I mentioned to you previously, that in order to kind of get a little bit more excited with the downside, we would still prefer to wait for a drop below this hurdle right here, this 90.59 zone, because it continued to, last week and the week before that, it continues to kind of provide decent support. So if we do get a daily candle staying below this area, below this hurdle, then yes, lower levels could be met, guys, and further decline could be possible. Then my next target here could be this 89 this one right here, 89.96 level, or in a way we could also round it up here a little bit towards that 90 psychological 90 territory. So at the moment I'm keeping an eye on this high of let me just quickly capture this one, the high of the high of the 5th of April of 2018. That's currently acting as a good area of support. If we see the daily candle staying below, then yes, my next target is that psychological 90 zone. Now jumping into gold, and of course gold is kind of stuck here for now. It did try to move higher today, as you can see earlier on, but failed to do so. However, what I'm going to say here is that I'm going to take a bit of a neutral stand, because what I need to see here is a clear break through one of these levels, through either the 1818 level, or even better, the 1800 zone, or I would need to see a push above this 1849 territory right here. So if we do see the daily candle remaining above the 1849 zone, then yep, we could start maybe looking at some higher levels. Of course, we'll still be very careful, but nevertheless, there could be more possibility for this one to move higher. However, if the commodity drifts lower and drops below that 1818 zone and remains below it, Now that's where it could become very interesting for more sellers, guys. And yep, further declines could be possible initially towards that 1800 level, and then maybe towards this level right here, the lowest point of November, near the 1764 territory. WTI oil, quick update here. So on Friday, yes, the commodity drifted lower. However, it remained above this hurdle, this 46.24 zone. I talked about this one, and previously I mentioned this one being as a good potential area of resistance. You can see that the commodity pushed nicely on Thursday last week. Then it remained above it on Friday, and yep. Today we're seeing a nice reversal back up. So for now, everything's kind of leaning a little bit more towards the upside. My next target is the 48.64 level, marked by the highest point of March of this year, and then I'll take it from there. But if by any chance the commodity starts drifting back below the 46.24 territory, now this is where I could consider maybe a bit of a correction here to the downside. Of course, the reason I'm saying correction, because we would still be above the 21-day EMA here, shown as the yellow line. But if that gets violated, and we see the price then falling somewhere below the 43.75 zone, now that's where it could become very, very interesting for some sellers. Now Ripple is at a very interesting spot right now, guys. I mean, you can see why. And basically for now, I'm gonna keep an eye on some of these key support levels, and the first one will be this 0.4596 territory, marked by the low of the 26th of November, and my next target will be this low of the 22nd of November, near the 0.4026 territory. So again, for that, I would need to see the daily candle remaining below this 0.5063 area right here, where it's currently getting a hold up. If it does that, then yes, I'll aim for these lower levels. If it doesn't, then there is still a possibility maybe to see a bit of a corrective move here higher. However, all eyes are on this downside, well, short-term tentative downside resistance line drawn from the high of the 25th of November. If that gets broken, then we can start aiming for some higher levels. AUDCH Chef, so beautiful move here to the upside. Let me just refresh this chart. Let me just remove all the drawings, and basically, as you can see, we are near a key area of resistance. So, and that being here, the 0.6711, approximately around here, guys. Or actually, let me just maybe capture these slightly higher areas. There we go. So 0.6713 or 15 even, I would say. Then nevertheless, this key area of resistance. So keep your eyes on this one, because as you can see, it has been kind of playing as it has been kind of holding the rate from accelerating further. Let's see if we can actually get that push above it. And to be honest, I wouldn't really rush into anything yet here, because what I don't want to see here is another false breakout. So if we do see a nice push higher, but then let's say by the end of the day, the daily candle reverses back down and ends or stays below this 0.6713 territory, somewhere around here. Now that's where it could be a little bit more kind of, let's say, interesting again for the sellers. But yeah, guys, still we would then still go for a bit of a larger correction, I would say, to the downside, if, like I said, if the daily candle remains below the 0.6713 territory, somewhere around there, then we could go for a bit of a larger correction towards this upside support line drawn from the low of the 20th of October. But if that gets broken, if this upside line is broken, now this is where, of course, it could become a little bit more interesting for more sellers, but even more of them could join in on a break of the 0.6551 territory right here, marked by the current lowest point of December. But again, we're currently leaning a little bit more towards the upside, but as I said, guys, let's wait for that daily candle, because don't rush into anything yet. We did have already a decent up move here, especially if you look at the 4-hour candles here. Then maybe a bit of a correction here to the downside could be possible. But again, let's not exclude that possibility as well. For now, all eyes are on the daily candle, and let's see if we can stay here today above this 0.671315 zone. Now jumping into USD CAD, the pair, it continues to slide here as slowly. Of course, it's, I would say, even grinding lower a little bit here. However, this 1.2730 territory somehow continues to provide decent support. And if we go back into history here a little bit, you can see that this level has been seen as the lowest point of May of 2018. We did get some overshoots here, but we didn't really get that daily candle staying below it. If we do see that daily candle staying below it, now that's where it could become a little bit more interesting for more sellers, and further declines could be possible, guys. So something for you to keep in mind. In terms of the upside, well, I would need to see a break of this downside line here, taken from the high of the 29th of October, and then a push up of the 1.2833 level right here, marked near the highs of the 7th, the 9th, and the 10th of December, or in other words, the highs near the highest point of last week. So a nice good push above it could, yep, open the door towards those slightly higher levels. GBP USD, guys, GBP USD managed to push nicely back up here. However, now previously I talked about this idea, or should I say last week I talked about this idea, but that if we see the daily candle remaining below the 1.3887 territory, now that's where we could go for a bit of a larger correction to the downside towards this upside support line drawn from the low of the 18th of May. So everything kind of worked out nicely initially, or should I say was working out nicely, but this morning, as you can see, it kind of opened a little bit with a gap here to the upside. Now, to be honest, it's a little bit of a tricky situation here, because again, it seems that the bulls are not trying to give up here. In a way, there is a chance for this pair to move higher. However, what I'm keeping in mind here is that we are still trading below this little short-term tentative downside resistance line, taken from the high of the 4th of December, or in other words, the highest point of December, the current highest point of December. So if this downside line continues to provide resistance, and if it stays intact, well, I mean, guys, we could see another round of selling. But if that gets broken and the pair starts pushing somewhere above this level, the high of the 10th of December near the 1.3413, now that's where we could then go for the upside again. But at the moment, we are very careful here, I would say, just because we had a bit of an up move here this morning, during the early hours of this morning, and that's why I'm going to take a bit of a cautious approach on GBP USD here. In general, with GBP pairs, I'll get to other ones in just a few minutes, yeah, keep your eyes on this little downside line, and yep, if it remains intact, we could see another slide. But if you're a little bit on the cautious side, what you could do here is wait for another move back below the 1.3287 territory right here, and then we could go for slightly lower levels, guys. So yeah, if you, like I said, if you're a little bit more on the cautious side, but if this pair not drops, but pushes above this downside line and above this 1.3413, then, well, maybe it's not really ready to go lower. GBP Aussie, so again, we're seeing a nice move higher here, but again, we're classing this as a temporary correction. So most important is that the pair remained above the lowest point of September last week. I talked about this pair, guys, and it stayed above it, and you can see that's the result we're having. So what I was saying previously, that if we see the daily candle remaining above this 1.7494 territory, we could see a bit of a correction here to the upside. Yes, we're seeing that right now, given that we had a sharp decline last week, but at the moment, I will say we're going to be very careful here, because now one of the levels that we're going to be keeping an eye on is this one right here, the 1.7840 area, approximately around here, marked by the high of the 17th of September and near the low the 1st of, or actually it's also near the lowest point of October. So very good potential target here, but if it provides good resistance, another slide here could be possible. Something to keep in mind as well, guys, is the where's that Fibonacci. So we can try to draw and see where this pair could retrace to. You can see that we if we take from the high of last week here, actually, is this the high or the 7th? I think it was the 7th. So yes, the 7th was the high of last week. So if we draw it this way, as you can see, we are currently near this 38.2% retracement on the Fibonacci. And by the way, this 1.7840 territory kind of almost nicely coincides with the 61.8% retracement on the Fibonacci. So basically, if this travels higher, this, like I said, this area right here could be an interesting one to watch, guys. And if it struggles to overcome it, then another slide could be possible. If you're a little bit more on the careful side, on the cautious side, well, you could wait for that push, a drop below the 1.7494 territory again, and then we could go for lower areas. Quick update on GBP/CHF. Look at the spectacular move to the upside this morning already, and a beautiful test of this downside line taken from the high of the 1st of December. Last week I talked about this level right here, the 1.17 or actually 1.18 level to be more precise. I talked about this one, and I was saying that previously that was acting as a good area of support. Now it could take the role of resistance, but as you can see, we managed to overcome easily that level. So we're now going to be ignoring it a little bit, but this downside line, that's what we're going to be keeping an eye on, because at the moment it's doing its role, it's holding the rate from moving higher. But if that gets broken and the pair travels back above the 1.1911 territory right here somewhere, now that's where it could become very interesting for more buyers. So let's keep an eye on that one. EURUSD. So failed last week again to stay above that 1.2155 territory. Again, another little false breakout. And this morning, another attempt to try and kind of maybe overcome it. So we're getting close to it again, to this barrier. But like I said, we need that daily candle. Of course, don't get me wrong, the more we test this area and let's say the more it remains close to it, there is the more chances that this could be a nice huge pop here to the upside. But again, let's be on the safe side, guys, and like I said, I don't want to get caught out here, let's say near this area, because we kept getting these overshoots here, but we didn't really get that daily candle remaining above this area. So we need that daily candle staying above this 1.2155 territory, and then we could go for some higher levels. At the moment, I'm gonna be very careful here, guys, very cautious, and like I said, I'll keep my eyes on this 1.2155 territory. If we see that daily candle staying today above it, then I'll continue targeting the upside. If it doesn't, then we could brace ourselves for maybe a possible correction here back towards this upside support line drawn from the low of the 4th of November. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I hope you enjoyed this session. So if you want to catch my video later on, my trader's tea time is always 14:15 GMT. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.